Hello and welcome to the Module 4 Risk Treatment Revision webinar. And my name's Stephen Shackelford. I'm an examiner on the International Diploma, and I've done quite a bit of teaching, mainly on the International Certificate and the old Diploma. Well, I'm here to talk through the risk treatment exam preparation. Hopefully, some of you will have already had some experiences of these webinars, so you'll have some experience, you'll know the kind of things that we cover. I suspect that this particular webinar will be slightly different in the sense that I'm going to focus perhaps a little bit more on exam techniques, some of which you'll be familiar with if you've ever gone through my workshops in the past. So we've got a few slides to go through. We've got an hour to do it, so we'd better get started straight away. So today's webinar then is first of all to look at where Module 4 fits into the Diploma, not much time there. Talk about the revision strategy in dealing with the 6 broad learning outcomes on this module. And then we'll look at the subsidiary learning outcomes, which in effect provides the heart of your revision program. Some developments, some other useful information. I put this of particular importance because for those who've looked at the reading materials, you'll know that a lot of the textbooks that you've got are actually from 2010, 2011. So I want to bring you up to speed with some of the developments that have occurred since then and explain why when I get to that point. We'll then look at some specific exam techniques, a little session on that, exam techniques for the day of the exam, and as I say, some of you may already be familiar with that. And look at the practice exam paper that has come through from the IRM, that's actually on the IRM website for this particular module, and to get some ideas of applying those exam techniques in point 5 to the practice exam. Well, finally, we will have a chance to have a look at some questions. Now, I've already got 2 questions, which I'll deal with straight away, I think. The first question says, do we need to quote the case law or understand the gist of the case law? This is in relation to, well, I think it's various, but particularly I think the insurance area where there's a lot of case law. The answer is you understand the gist of the law. You don't have to understand or remember the cases in detail. Thoughts, and this is also insurance, thoughts is very detailed. Do we need just to have the high level understanding for the exam? Well, in fact, of course, I think this is a general principle. There is a lot of detail in all of the textbooks. You obviously need the high level stuff, and that is critical, and it's trying to make sense of what is high level and what is detail, which can be the challenge. So in a sense, I suppose I'm going to try to give you some views and clues on that when we combine what we see in the reading material and what we see in the practice exam. I think that may actually help you. So we'll come to that later. This is just a quick outline of the whole diplomas. I don't think we need to talk too much about that now. Module 4 then, where does it fit in the whole of the diploma? Well, it's a build really, particularly on Module 1 of the certificate, which for many of you, you may have actually done the old certificate, old syllabus certificate. So it really builds upon a lot of the theory and practice of risk management that you would have covered in the old syllabus. The big difference, I suppose, with Module 4 to some extent, I'll put it at the bottom, this idea that it's the high-cost module. And this is basically the specific characteristic of risk treatment. It's the time when you have to make the decision to invest in a response to risk. So it's hard money decisions that you are making in this particular module. So things like the value for money of risk management and the costs involved in controlling risk come into their own really in this module, as they haven't done perhaps so much in Module 3, where we're looking at the severity of the risk and identifying risks. Now we're actually having to pay money out to treat these risks and hopefully reduce their severity, assuming they're hazard-based risks. So if we then, moving on to the second subject of today, looking at the 6 broad learning outcomes. Well, what we can see with those 6 broad learning outcomes is a kind of I suppose we could divide the module into four different areas. The first three modules, in effect, is a whole lot of discussion about the various responses to risk management. It's talking very much about the treatment aspects. Perhaps module 1 is linking risk treatment to the other areas of risk management. Selecting them in Unit 1. In Unit 2, evaluating and selecting the control mechanism, so choosing the types of controls, and that continues then into Unit 3. Now, if you look at Unit 4, that's quite interesting, because that's actually moving to some extent a little bit away from pure risk treatment. We're actually now going into the monitoring and review part of the, if you like, the ISO framework. And also, the reporting side, very much on the communications and consultation. So it's almost like the two sides of the ISO 31000 risk management process. That's Unit 4. And then Unit 5 and Unit 6 are some specialist areas of risk treatment. So we can see that if we divide that module into those areas, you can see those four things coming out. The core stuff at the beginning, the first three units. Monitoring and review, communications, consultation, Unit 4, and then the specialisms, Unit 5 and 6. So as we consider those key topics, those key units and the learning outcomes which derive from them, the ideas that I've got for you in terms of revising is to try to make some longhand notes from each, I suppose we could call it, each unit in your study manual, plus in each of the textbooks that you have to read, and in particular the Hiles one, the Thwaites and the Chapman. And try and summarize all those by condensing them into topics, incorporating some of the notes that you'll get from this webinar, particularly in terms of the developments. And also perhaps taking into account of some suitable recent case studies. Again, noting the fact that in the study text, the study manual, some of the case studies that you've got there may have actually moved on a bit over the years since the study manual was written. You then might review what you've got from these these topics, having condensed them, and then start to write out the key lists to learn for the exam. And I'll show you what I mean in the next couple of slides. So, in our learning stage then, we're coming to the end of that now, your longhand notes from the study materials. We're now into the revision session, so hopefully from this point on you can start to condense the content from all of the learning materials into the core topics, which in effect are the units and the subunits of each of the within the module. Then start to create the key lists, which condenses the topics even further, and practice on some previous papers, and then learn those key lists. So if we move on to the next slide, these are in effect the key lists. So it is in effect the learning outcomes which I've translated into perhaps more clear speak in terms of what the key lists are. So we've got the key lists halfway down, and this is the key list. So what you need to be able to do is you need to be able to, so for example in Unit 1, the key things there is you've got this link to the risk management cycle, risk identification, categories and sources. And hopefully you can focus in your revision by just those words will enable you to then remember the other things that you've written in terms of the higher level summary notes of each of the units. The interesting thing about this particular slide, this summary of the whole module, is how much more content there appears to be in the latter units. And I think that's really quite important, quite illuminating in the sense of the emphasis of which you've got to actually prepare yourself for the exams. So Unit 3, 4, 5 and 6 have a lot more content. And this means you're going to find that your notes are going to be longer and in more detail. Unit 1 in particular seems to me to be very much of a supporting module, a supporting unit rather, into what comes next. So I'm going to quickly go through some of these learning outcomes and perhaps bring in some additional specific ideas that you could talk about. So for the first one, the link to the risk management cycle. If you actually have a look at your study manual, you'll see that actually that's just an abbreviated form of a risk management process with the feedback loops, of which monitoring and review is of particular importance. So if you're struggling to remember that particular area, just think of ISO 31000 as part of the feedback. And the process of going from setting the context, identifying risks, analysing risks, evaluating risks, then treating risks, and then monitoring and reviewing all of those various activities. You've then got the various ways, the categories of risks and the sources of information. And you might want to ask, I mean, Thwaites actually does this, although it's not connected with insurance. In his first chapter, he talks about why organisations want to manage risk, want to treat risk rather. And he talked about 3 reasons: economic reasons. In other words, they want to manage and improve their finances. They've got a legal or a regulatory requirement to treat risks, and they've got a moral duty to treat risks. And in fact, if you think about it, the legal and the moral ultimately feed back into the economic. So in a sense, particularly from the commercial world, the underlying purpose is one of the economy. And that's actually why cost benefit in Unit 4 is very important. Unit 2 then talks about how risks change and evolve, and then it goes on to move on to talk about the famous 4 T's that you would have covered in earlier modules or on the certificate stage. Noting with the toleration of risk, which it doesn't actually talk about in the study text, that there is a danger that organisations will simply tolerate risk out of ignorance. In other words, if they actually haven't analysed or identified the risks, then the chances are they're actually tolerating them subconsciously. And with terminate, it doesn't also, there's another factor there that it doesn't talk about, which is pretty important. And that is, there are some organisations who actually have no choice. They cannot terminate risks even if they want to. And I'm thinking here of some of the public sector organisations who have a legal responsibility to deliver services, even if the particular level of risk is over the risk appetite and they don't feel comfortable with it. So the 4 T's then, it's taking the ideas that we looked at in the certificate stage to a little bit more depth with more examples of the various T's that are there. Then it talks about some of the difficulties that organisations have in actually making that choice. And it also talks about some of the skills and competencies that a risk manager needs to have in order to help particular business units in making the right choice of the various treatments available: tolerate, treat, transfer and terminate. And of course, here you need to take note of the fact that an organisation may well transfer and treat and to some extent tolerate a risk at the same time. So for example, it will treat a risk before it transfers a risk in order to reduce the cost of the transfer. But at the same time, when it transfers a risk, there will often be, in the case of insurance, an excess which it then has to decide whether or not it's going to tolerate. So you can see actually that there isn't always a great deal of difference between some of these T's at all. So in a sense, Unit 2 takes the various different types of treatment that are available. Unit 1 sets, if you like, the context in which risk treatment occurs. And that, in a way, is the risk management process, the earlier modules, in fact, of the certificate and Module 3. Unit 3 then, the risk resources. Now we're getting into some of the bigger stuff, and really, I guess it's some of the new stuff that's really coming along for the first time. So the first element of the learning outcome in Unit 3 is about the categories of control. And in a way, this is very similar to the way we classify risks. So in Module 3, we classify risks into the various types of risk. We can similarly classify controls. And so in your study guide, you'll see that there's a a four-way categorization of control, but that isn't the only way, and many organizations categorize their controls into other different forms. And then don't forget, Hopkin talks about the PCDD in his chapter 22. So that's deemed to be another categorization or dimension of control. We've then got the various resources that organizations can draw upon to to treat the risk. So it could be treated from an internal source. You could buy in a service, a freelance person, a consultant who might come into the organization to treat a risk, or you can completely outsource the risk, a pure risk transfer. Then talks about who should decide upon the control, and this in a way is starting to link into Unit 4 and the responsibilities as to who makes the ultimate decisions on control. And similarly, the next one, in justifying controls, we're looking at here at justifying controls, noting that it's not just about cost and benefit, but it's about the fact that controls and the scenarios change. We'll draw upon that a little bit later too. Then we've got the more complicated situations that many organizations face. In other words, there's multiple exposures to risk. So one risk can trigger another risk, and it's this idea in enterprise risk management that there are relationships between risks. So in other words, when a risk occurs, it isn't going to just affect one particular department, but its effect could spread. And that indicates also the need to have potentially multiple responses. So that's really what we're talking about there. Unit 4 has the biggest number of learning outcomes or subsidiary learning outcomes. It's got 6. And as I say, this is where we're moving on to specifically the monitoring and review side of treatment. So first of all, the various reporting methods and who should do what. So this again refers you to read Hopkin chapter 12, which is very much about the roles of a risk manager and how a risk manager can help with the reporting processes. Don't forget, in this case, the responsibilities may well be identified in a risk manual, which isn't mentioned in the study guide, as well as some of the other sources. Chapman chapter 13 deals with this as well. The various sources then of information for collation into a risk report. And here we're looking at obviously risk registers, but again there's a good range that you need in the study text, which you just need to make a list of and remember. There's the need to test and monitoring. This is perhaps the most important area. And Chapman, it's not in the study text, but Chapman does summarise this quite nicely from a guy called Drucker. And Drucker says that the controls should have 7 classifications or attributes rather. Economical cost-benefit is just one of them. But controls and reports need to be meaningful, they need to be appropriate, they need to be congruent, which means they need to have some relevance to the event that's being controlled. They need to be timely. It's no good managing a risk long after it's actually occurred. The simpler they are, the better, and the more flexible they are, the better. So those are some of the testing criteria for testing the quality of an internal control or a response to risk. It isn't just cost benefit, and I think that's an important learning outcome for you to take with you. Formatting, formatting board and other reports. Well, there's a couple of things that you can draw upon here, one of which is the accounting standard boards, which talks about the quality of reports, both internally and externally. And don't forget this, we're talking here about both internal reports and we're talking about external reports, reports to the board and reports in effect from the organisation to the external stakeholders. And you've got to make sure that both reports are consistent with each other. You don't want inconsistencies between the two. So the Accounting Standard Board talks about materiality as being the major dominant criteria for decision making. That you provide information in your reports on things which are of material importance to the reader. Relevance is a secondary categorization. And that's all about the relevance to the key objectives or the key risks. And timeliness comes into there. The third area is the reports need to be reliable. And that means they need to be unbiased. They've obviously got to be correct, objective, and complete. No key information missing. They've got to be understandable to the recipient. And they need to be comparable. So you need to be able to compare one period's reports perhaps to a previous period to get the trends. And that's particularly important when you're monitoring controls. And finally, at the fifth level is all about the feasibility, the cost and the benefit of providing the information. So it isn't, the study text to some extent seems to suggest that a lot of this is about cost benefit, but it's much more than cost benefit. It's about the usefulness as well. Then the subsidiary learning outcome 5 and 6 from Unit 4 really summarise learning lessons, again monitoring and review aspects, learning lessons from events and near misses. A very important area, and looking at the idea of using both reports and the events themselves to build better responses in the future. And we'll look at that a bit in a moment, because there's some developments in this area which I want to bring your attention to. Similarly, the responses to major changes. Well, how can major changes occur, and what impact are they going to have on the controls that you've got in place? Well, first of all, what you can do is you can use your risk management process to help you here. The context, setting the context, is one of those areas where a lot of change can occur. Changes to stakeholders, changes to the external environment, the external context, changes to the internal context. So, for example, a change in risk appetite. All of those things are going to influence the suitability of the controls that you've got in place. Changes to the objectives. If your objectives change, then potentially your risks will change, which means that your controls will need to change. And obviously, if the risks themselves change, even if the objectives don't change, you need to consider changing your controls. And finally, of course, controls themselves evolve over time. So you need to be responding to changes in controls and making sure that those changes in the controls are still relevant and up to date. So the idea is you need a constant monitoring activity. Then we're into Unit 5. Now, Unit 5 is very much there's a lot of learning, I think, in Unit 5. The question is, and someone has raised this question already, how deep does that learning need to be? And I think when we come and have a look at the exam questions, it might give us some clues. So there's some insurance principles, the distinction between self-insurance, captives and things like that. Particularly, I found the first couple of chapters of Thwaites really quite easy reads there and very, very helpful. A good lot of principles there. Don't forget this idea, though, I've already mentioned it once before, that transfer needs to be combined with treatment. So in other words, you'll generally want to treat the most severe aspects of the risk, the high likelihood, high impact elements. You'll treat it first before you transfer the residual to somebody who will manage the risk more economically. But at the same time, don't forget that by transferring the risk, you don't transfer the whole lot. So you're still liable to having to do a bit more treatment even after you've transferred the risk. That's an important principle underlying insurance. Then the second subsidiary learning outcome, life versus general insurance, the various different types of organisation that are involved in insurance. That's really just learning. So that's useful. Subsidiary Unit 3 looks at the structure of insurance, so what the buyers do, what the brokers do, what the insurance providers, the insurers themselves do, the idea of reinsurance and the swings in the market between a soft market when premiums drop and a hard market when premiums go up. And Thwaites, again, in Chapter 5, talks about the various types of insurance company that exist in the market. Subsidiary learning outcome 4 focuses on government and quasi-insurance. Again, there's 4 different types of quasi-insurance plus the government approach, the government support to help. Really, these are systemic types of risks. I'm going to talk more about this again because there's a development in this area shortly. And then 5, again, really it's largely about just learning all these other different types of risk financing: derivatives, bonds, swaps, credits, technology cover, catastrophe cover, and the Islamic cover. Thought's in chapter 13 and 14 give a nice little summary of that, but perhaps a little bit easier to read than in the study manual. Unit 6 then, the last one of these specialist areas. What is BCM, the first subsidiary learning outcome? And that idea of the definition is really quite important. Noting that perhaps BCM is dealing with a pre-disaster, dealing with the events during the disaster, that early detection being very important to the event, and then particularly focusing on the recovery post-crisis. Then it talks about why organisations need to plan for business continuity, and there's a bit of a discussion about the focus on whether it's just on high impact, low likelihood risks, and that's still very much on debate, as you would see. The other thing then is the roles in terms of business continuity, who should do what, and the good practice guide is quite nice here because it actually divides these roles into 2. There's the top-led approach, which is the first of the management areas, and the second of the management areas is all about embedding, or as the study text describes it, cascading down from top to bottom. And then the importance of business, the analysis, business interruption analysis, and that sort of thing, BIA. Subsidiary Unit 4, the various elements and the 5 steps and the business continuity manual. So five elements, the 5 steps involved, talked about in Hiles chapter 2. The good practice guide, which of course is focused on the ISO 22301, actually has 6 stages. So that could be quite useful to compare and contrast. That's the newer version. But I want you to also, when we think of what you need to do with BCM, is not just think about what we need to do, but we also need to think about what already is in place. We don't want to have to develop disaster recovery, continuity aspects if there are things already embedded and already in place. So you also need to think about what's there. And then the 5th one, black swans, which is a specialist area, I suppose, of business continuity, these very hard to predict types of risks and what businesses can do to prepare themselves for those. So I think that's a coverage of the main areas of the syllabus. And as I say, what I've been doing is as I've gone through each of the subsidiary learning outcomes, is to be able to open those up and think, well, what is it that I need to draw into those for my revision? And can I talk around them a little bit more? So that's why this is a good little tick list. Use it as a tick list and ask yourself, as you get up to the exam, what do I know about, for example, Unit 5, Subsidiary Learning Outcome 3? Exactly. Right, so now we're moving on, I suppose we could say, to the second half of the presentation, which is to bring in some of the other relevant information, the new stuff that has come along, as well as some alternative sources of learning, which you might find useful, particularly if you're getting a little bit tired of doing a lot of reading and you want some learning from alternative sources. So for Unit 1, there's a great free webinar on the IRM website which covers all that you need to know about risk appetite. And in particular, what you need to know is how risk appetite is relevant to risk treatment. And of course, that is a critical aspect because that helps us decide whether or not to treat or not a risk. So that comes up, risk appetite, in Unit 1.1 and Unit 2.2. 1.1 means the first learning outcome, subsidiary learning outcome for Unit 1. Also, there's a good one for Unit 4 on risk reporting, very relevant to Unit 4 and key risk indicators that are useful for boards so that boards can get an indication of where risks or controls have changed and the risk has become more severe. So again, you could have a look at that. Each webinar is around about 45 minutes long. So again, if you're feeling tired of some of the reading, dip into one of those for half an hour and you'll be doing something useful. The IRM guides, although there's not specifically a requirement to read these, you will have picked up on some of these in your earlier modules anyway. But subjects which have come up, there's been a subject in the practice exam that's come up, question 1 on risk appetite, so it's probably worth being able at least to quote that the IRM has issued a paper on the subject. Similarly, another topical area, extended enterprise. The IRM has given some good guidance on extended enterprise, and this again has come up in an exam question. So although not technically in the syllabus, these are areas where particular areas of treatment which could be of quite use to you when you actually come to the exam, because that's topical. Cyber risk, again, not in the syllabus, but such a topical area. And thinking of the treatment options for cyber risk as an important area. And there was another one on risk culture, on the culture to treat risks effectively. So culture is another aspect in terms of monitoring review and to make sure that controls are being applied in the way that they should be. And culture is an input into that. So again, the further reading around Unit 4, Subsidiary Learning Outcome 3, and Unit 2, Subsidiary Outcome Learning 3. I always recommend students have a look at recent copies of the Risk Management Professional magazine. 2 reasons for this. One is because examiners look at it when they write exams, but also it looks really good, again, for an examiner to see evidence that you've done wider reading. And this is the best place to do it. So these are some references to some relevant reading from the last 2 professional magazines. Something on the extended enterprise. Again, it's actually a summary of the IRM's report. The analysis of Bhopal, very relevant for Unit 6 in the days really before business continuity existed. And I should actually say that in Winter 2014 magazine, there's also a business continuity subject on flood risk on page 16, which again could be quite interesting for you to look at. Also in Winter 2014, there's the IRM's professional certification, which is about the developing role of the risk manager in terms of their responsibilities and their roles and their competencies. Now, you've got Hopkin, chapter 12, as a reading item. And in a sense, this is new development on that particular area. So I've referenced it to quite a few learning outcomes where the role and the responsibilities, the competencies of the risk manager could be important. Spring 2015, a development in insurance. The UK has issued a new Insurance Act as of the beginning of this year, 2015, and this summarises the changes in terms of the Insurance Act, page 21. Also, in spring 2015, there's an article on cyber risk and insurance solutions around cyber risk. The problem actually is the insurance market isn't very well developed for cyber risk. And this comes on to another subject that I'm going to talk about in the next couple of slides. But again, very relevant for unit slides, so have a look at that one. And the third subject that's relevant for Unit 4 Subsidiary Learning Outcome 5 is about learning from events, and an article on that. Now, for those who are really keen, and I'm not suggesting you do this at all, but for those who are really keen, the IRM's Online Resource Centre provides you with a whole lot of subject areas that you can go into and pull out for at least Unit 5 Insurance and Unit 6 Business Continuity, the specialist areas. There's a lot of stuff there, but probably beyond what you need for the exam. Now we're going to look at some relevant information on a unit-by-unit basis. I've already mentioned one or two of these things. So we're going to go through each of the units and with the subsidiary learning outcomes notified onto the left of each of the screen. So for the subsidiary learning outcome 1.1, what I'm saying there is that the risk management cycle, if you can't remember what that is, then the ISO 31000 process is exactly the same, and strictly speaking, a better risk management cycle to use. I've already talked about the importance of ISO 31000's area of consultation, communication and monitoring and review as part of Unit 4 as well. Unit 2 then, some points to take into account for your revision here. Learning Outcome 2.1, don't forget that the 4 T's are approaches to hazard-based risks only. They don't deal with opportunities. And therefore draw your attention to the Orange Book, which is in your reading materials. The 5th T option is all about dealing with opportunity type of risks. So that's quite a relevant area for you to pick up on as well. Unit 2, Subsidiary Learning Outcome 2, other types of risk transfer that haven't been included but which are relevant: joint ventures, strategic partnerships and consultancies, using a consultant, which are not included in the module text but which you could draw upon. Supply chain risk, and this it's really relevant to any control, any response that you make. Supply chain risk is just one example, but I'll give you the basic law. The basic law of a control is that for every control that you input or you develop, there can be some unforeseen consequences which may actually result in risks in other areas. So, for example, organizations outsource their supplies in the supply chain as a response to the fact that it would cause them cost overruns to manufacture the stuff themselves. Send it out to the experts. Potentially the unintended consequences is of course a break in the supply chain. So you adopt a control which results in a second level risk. Your second level risk then is to manage those unintended consequences. So as part of any decision on a control to make, you need to be thinking of what unintended consequences could occur from the controls. Then in point 2.3, I've talked about the development of the IRM's competency framework, and that's been discussed in one of the earlier risk management professional magazine items. So it's the winter 2014 IRM's professional certification. The IRM are in the process still of developing a competency framework for the expectations, the roles and responsibilities of the risk manager. So that's something that's worth mentioning as well when it comes to the roles, who does what in terms of responses, treatment, controls. Unit 3, other control classifications. So we've talked about the PCDD, that's very important. But there are other control classifications, not just the one in the module book. PCDD, very important approach, almost like another dimension of risk controls. Very important point, when deciding upon which new controls you want to develop, don't forget that there are already current controls in place. So in a sense, when you're implementing new controls, what you need to do is monitor and review the controls that are already in place before you develop new ones. Very important for almost any exam question where that applies. Planning and justifying controls for emerging risks is a complicated area, very similar to this black swan idea. 3.4 and 3.5, don't forget the use of the bow tie that you have covered in earlier modules in order to map critical points in a process and apply treatment at different stages of the risk unfolding. So preventative controls on causes, corrective controls on consequences. And then don't forget this idea of the I mean, it came across with the Indonesian plane crash where the pilots overrode standard controls in order to try and get around a storm, and the dangers of overriding and the benefits of overriding standard controls. So the idea of the AV can have multiple controls. Unit 4, very important point, which the module text doesn't go into much, and that is that monitoring and review isn't just done by the Chief Risk Officer. It's done by, there's internal audit, there's the control risk self-assessment approaches, which you would have covered in earlier units. We call them the 3 lines of defence. Very important area of monitoring review which you can bring in should a question come up in this area, using the various risk management specialists to do it. Also, don't forget the use of risk management information systems as a key source of data and information for producing monitoring reviews and particularly reports, internal and external reports. Don't also forget Unit 4.4, communication as a risk response. So, for example, the article last week about Tesco and their record deficit. What Tesco did, it approached what analysts have called the kitchen sink approach, which is to throw every bit of bad news into the kitchen sink at one time and get it over and done with. And what they found was actually Tesco's share price actually increased. It was almost like all of the bad things came out at one time. So that's what we're talking about there. So communication can actually be, the way you communicate can be a risk response in its own right. Some topical examples then of risk of control re-evaluation. The BP Deepwater Horizon is a great example of dealing with near misses, learning from near misses, and not so much from BP's point of view, but from what the competitors did. So what all BP's competitors did was they re-evaluated their control on the basis of what happened to BP. And similarly, in the Malaysian Airlines, what we've learned from a particular risk occurring is that monitoring the position of a plane at any one time has become much more important. Topical examples of changes, 4.6 of circumstances, the German Wings event, where the businesses now, or the airplane companies are thinking about the importance of closing the cabin doors early and in advance. The issues of having the cabin doors closed and the risks that can occur, and whether there needs to be more people on the deck at any one time. So big events can give you opportunities to provide some good examples. Unit 5, developments and relevant information here. The thrust of this unit then is all about insurance as a treatment option, along with the risks to the person being insured. But also, don't forget the risk issues to the insurers themselves. They also are taking the risk. The study text doesn't really deal with pensions risk. So that's an area of thought that I think we really do need to look at, although it hasn't come up in the practice paper either. Mentioned the Insurance Act already, relates to Thwaites Chapter 5, but it's not there. It's new development. Thwaites in Chapter 5 also refers to the Financial Services Authority, the FSA. This is now defunct, and it's now the Financial Conduct Authority since about 2011. So just take note of that fact as well. There are some changes that have taken place. I've spoken with the exam team at the IRM about this, and what they've said is if you can't remember some of these new developments, it doesn't actually matter. You can still use the FSA and get away with it, but it just looks good if you know the up-to-date stuff. Solvency, again, Thwaites in Chapter 5 is about 4 or 5 years out of date on solvency. Solvency is not due to come in until January 2016. I'll put a Wikipedia web link there for you to have a look at the latest position on Solvency II. And then there's also talk about government-backed insurance for cyber risk. Cyber risk is such a systemic type of risk that there's talk that the government themselves need to be able to support insurance in the same way as they've done for terrorism in the 1980s, because it's just simply too much of an unknown risk for the insurance companies to have the capacity to cover. So that's an important area to think about as well. So those are some developments in insurance. Finally then, BCM, Business Continuity Management. And again, draw your notes to some degree how similar the steps are in terms of a normal risk framework in developing business continuity. It's like the planning stage, implementing stage, monitoring stage, and learning stage, PIML as the Hopkin book talks about. I'd recommend you look at the GPG Lite, the ISO summary, because that's really got a nice summarized approach, which to some extent I think beats the study text. The study text is quite complicated. It's got lots of different ways of showing the stages. I think you should just remember one, and there's good stages either in the Hopkin book, the relevant chapter on business continuity, or the ISO in the GPG Lite. Roads to Resilience is a good article as well. A short article, just 2 pages, but what it does is it summarizes all characteristics of organizations that can survive disasters that are very much similar to those in business continuity. It talks about 5 particular principles for good ways of characteristics, principles of a resilient organisation to be able to manage a crisis. Now, the thing to take into account with that, of course, is, again, it's not essential reading, but notice it's come out since the module study text has been written. It's a very recent thing. The last thing then is black swans, and you should note, and in fact this actually relates to the whole module, there's a very big emphasis on this module being about hazard risk treatment responses. But notice that black swans can be both positive and negative events. A positive event being, for example, the creation of an internet and what opportunities that gave business in the early 1990s. So don't just think black swans as being completely a negative things. They can be just as much positive as negatives. So that covers the things to look out for. Some of the exam techniques then. The exams has been set 7 months in advance. In some cases, that means the risks in the real world in your module study text have changed. We haven't got any trends to be able to detect what's going to come up. It's too early. We've only got a practice paper. We haven't got case studies. But here are some pretty important tips that I've given you from having had a look at the practice paper. Define key terms and concepts in each paper. We'll have a look at a couple of questions where we can apply some of this. So define key terms and concepts. Almost every question has got an opportunity to define, and the suggesting answers to give you sort of 3 or 4 marks for doing this. Easy marks these are. Assumptions. If a question is unclear, state what you assume and why you assume it. Assume that the examiner knows nothing. I'll give you an example of this. If you're asked to implement some new controls, don't forget to take into account those controls that already exist. Use your time wisely. Give yourself 45 minutes for each 25-mark question, particularly if you've gone over on question 1, and it's very easy to go over on question 1, don't. Stop at 45 minutes. Other things, we'll talk about definitions a bit later. Handwriting care, obviously, particularly important as you get towards the end of the paper. I think it's a good idea to underline key text, and particularly you can underline the segments of the question to bring definitions, for example, to the examiner's attention. Bullet points, not at this level, please, not at Module 4, it's a postgraduate. You won't get many questions which ask you to list or identify. Only really do it if it's your last question and you've run out of time. And leave a gap between sections in case you get some good ideas. Some of the key mistakes that you're going to find is obviously not answering the question that's required, running out of time management, but also finishing too early. You shouldn't be finishing too early. And in most cases, this is the characteristics of somebody who will fail. And you can, again, look at some of the other things down here. Not following the key command verbs and looking for opportunities where there's a scenario. Make sure you refer to the scenario. And many of the exam questions on this paper do exactly have a scenario. Okay, so let's have a look at a couple of the exam questions that have come up in the practice paper and get some of those tips down into our answer. So the first one then, first thing to do is to look for these emboldened command verbs. Question 1 here, we've got 3 command verbs that are emboldened. You'll see that every question in Module 4 has a simple 25 marks. So you've actually got to desegregate it into your Part A, Part B and Part C that you might have been accustomed to from earlier papers. The command verbs enable you to do this. So in question 1, state why each organisation's appetite to risk is unique, is in a way Part A. Then recommend an approach that the board can take in defining each organisation's risk appetite. So that in a way is Part B. Part C, discuss the purpose of formally setting out a risk appetite and tolerance table. So you've got, with your command verbs, a nice easy way to structure your question. So give yourself lots of space between each of them. The other key tip then for every question is look for an opportunity to get a definition in. Now, what can we see here as for a definition? Well, we can see a definition which gives us risk appetite. What is risk appetite? That is a classic definition to get in, and you'll get 2 or 3 marks for putting it in. Any other question? Any other ones that we could get in there? Well, there are perhaps a couple of others that we could bring in as well. So, for example, notice in that statement why there are many influences, why risk appetite is unique. What do we mean, another definition at the discuss one, what do we mean by a risk appetite and tolerance statement? What is it? And again, Hopkin will give you some clues on that. But notice there's not so much here on risk treatment. And this is very much because it's part of this introductory Unit 1 and Unit 2. It's looking at risk treatment in the wider context of the risk management process. Question 2, so question 1 is a pure theoretical, but question 2 is slightly different. We've got now an international clothing retailer. And again, though, we've got nicely structured emboldened command verbs which we can use: explain, describe, and critique. So, explain the types of control that can be used. And this is again where you can talk about theoretically what we mean by types of control. I've already said that we can classify control in the same way as we can classify risks. Different types of control for different risks. And it specifically asks you then to apply it to outsourcing. So you could talk about what we mean by outsourcing supplier garments, and talk then about some of the risks that are relevant in that particular area. You've got to talk about the risks in order to think about the types of control that are applied. Describe the practical examples of the types of controls you'd set out. Then you've got to propose an organisation, and this is where there's a bit of ambiguity. It doesn't actually require you, according to this, to actually choose an international clothing retailer. It just says an organisation. Now, my guess, I would assume that it is a clothing retailer, but arguably you could get away with actually choosing any organisation. But to be safe, I'd go with a clothing retailer and critique some of the ways in which a business could have failed to have control over its supply chain. Now, some of the articles I've just been mentioned to you in the Risk Management Professional magazine have dealt with this very, very subject. And the IIA guidance on supply chain risk could be very useful additional reading here. So this is what I mean about this. It's a topical area. Some of these, although they're not compulsory reading, you can find some useful information to help you. Question 3 then. Question 3, in the light of the above statement, so again, notice recent airline disasters, another applied case as opposed to pure theory. We need to apply now our answers to airline disasters. Now, I have to say that if you fail to do that, you can still pass the exam, but you're not going to get such good marks. So you do need to look out for these opportunities to apply, because a lot of it's theory anyway, and it's the same theory just applied to different organisation types. So what can we look at then? Discuss and recommend. We've got 2 command verbs, so we've got 2, if you like, parts to the exam. Definitions. Well, what about a definition of what we mean by hazard control and opportunity risks? And in particular, you need to define what we mean by hazard risks. You could also as well define what we mean by risk appetite. That comes in that second part. Looking at different risks requiring or having different risk appetites. And how risk appetite can change as a result of events. Some of the recent airline disasters, very, very topical area. Now we've got question 4, 5 and 6. Now, question at the bottom is perhaps important to hear. How do I know the marks awarded for each command verb? It's a very good question because you don't get a breakdown of what's in that 25 marks. The answer, all things being equal, is to assume roughly half and half. But noting the opportunity to get definitions in will actually, if you like, include some additional marks that might not be obvious in those 2 command verbs. So looking, for example, at question 5. Explain and discuss, probably 2 equally related command verbs. But we'd want to perhaps talk about what we mean by risk controls as a definition, or what we mean by efficiency saving. Giving it a little bit of a context can give you a bit of an extra mark. So it isn't necessarily saying 12.5 for explain and 12.5 for discuss. It's a combination of also looking at for opportunities to include definitions and other things. The marking, it's important to say that the marking scheme that you see there is not the only ways in which you can earn the marks. And that's particularly important as we get onto these later modules. Also important not to get deflated at these marking schemes. Remember, these marking schemes are for 100% of the marks. You only have to get half of what's there to pass. So don't get too demotivated when you see these suggested answers, because that's the perfect answer. Question 4 is quite a challenging one, because in this one you can see that there's actually no breakdown. There's only one command verb. Review the aspects of the business continuity management life cycle. So you've got to actually look for a ways to break it down yourself. The first thing you can do is talk about what we mean by a business continuity management life cycle. And then you can start to draw that, very much a theoretical thing. Notice as well that it's about applying it to a facilities management company. So you've got to try and apply it to there. Think about applying that life cycle, various stages, discussing it to a particular, what a facilities management would want to be doing to a particular client. Note also how important it is to read the question carefully. It's dealing with the client's premises. So it isn't necessarily about disaster recovery around IT. It's not necessarily about supply chain. It's about one particular area, one particular key dependency, which is about access to premises. So business continuity then can be around a range of key dependencies or core processes that the business relies upon. And so you need to break that one down into its particular segments. I think that probably covers the exam paper, but notice that there are questions from each of the units. You can pretty well be confident you're going to have a pure question on Unit 5, insurance, and a pure question on Unit 6, business continuity. That's a pretty safe bet. I would imagine as well you're going to have one which is very much about the Unit 3 decisions to implement new controls, and who does what in that area as well. The other 2 units are rather small, so you could find those could combined in a larger question. As an example, I've just got another question come through, and we're actually onto the question stage now. As an example for question 4, how many lines do I need to write? Well, I can't really say how many lines, but I can give you some tips. Draw a diagram if you can. It will help you with your presentation. The critical thing actually is spending the right amount of time. 45 minutes on each question will give you an indication of how much you can write. And that's really the thing. It's 45 minutes per question. So it's less about the amount you write, it's more about the amount of time you give. For question 6, would they expect us to format it like a business memo? I think you could include that, but normally they would ask you more directly if you wanted to put it as a memo. There's no harm in doing it that way, but it's probably not required because the question doesn't specifically or explicitly ask for it. So I don't think that's quite so important. You're going to get your marks for content here, not for presentation. Sorry, you just mentioned that Unit 5 and 6 will cover one question. Are there key areas that we can focus on? Well, one of the things I've noticed with these 2 sample questions, in other words, the specific one question 4 based on Unit 6 and question 6 based on Unit 5, is that these are fairly high-level basic questions. And a lot of the detail from Theuts and from the business continuity textbook don't appear to be drawn into that. Now, I don't know whether you can draw any conclusion from that yourself, but obviously the more you read, the better. But it seems to me that there are some key things that you need to know. Business impact analysis, BIA, is definitely important, and that cycle, that 5 or 6 stage or 4 stage cycle in business continuity development seems to be pretty important as well. On insurance, the various types of insurance, the structure of the insurance market seems to be pretty important. So I think it seems to be that, certainly from this practice paper, these are fairly high level kind of questions. They don't seem to have the depth that what I kind of expected at the outset. But that's my interpretation. You know what you've got to read. And in a sense, it's up to you whether you read it or not. And I think we're pretty well there. Finally, I do not wish you good luck, but I hope the work that you put in brings you the reward that you deserve. In other words, if you do decide to read every single chapter, every single bit of the Hiles, Thwaites and Chapman textbook, and it comes up, you will get the reward that you deserve. So I suppose that's my answer to that. Now we've had a few questions on which I think I've answered them all. Yeah, I think I've answered all the questions that have come up. Oh, there's one more just coming now. For each question, if it has no case study, do we just include the narrative theory? Good, very good question. My suggestion is, yes, you can do this, but provide examples if you know about them, because that will always get you some extra marks. They like, even with a theoretical question, if you know a case study which illustrates the point, or from your own background, your own work experience in your own organisation, what we do around here, then include that in. But obviously you need to explain things in a little bit more detail. For BCP, Hopkin and the links are enough, question mark. Well, the answer is technically no, they're not enough, because what's on your reading material is what's enough. So I think that's the answer to that question. But I think it's all a case of quantity and percentages. We can see from this practice paper that the basics are more likely to come up than the detail. But if you've got the detail plus all these extra development areas, then and plus you can provide examples to illustrate, then you're going to improve your chances of getting a very, very good mark. So I can't really give you an absolute guideline on what is enough, because technically you should read everything that's available on the reading list. No, right, a good question. Apart from the specimen paper, are there any other past exam papers? I'm sorry to say there are not any other past papers, because this is the first year, the first session, in fact, of a Module 4 question. So in fact, actually, we're right at the start. So you, in a sense, are the trendsetters for the future. So the answer to that question is no, there are no other exam papers available at this stage. Okay, I think I'm going to have to come to an end now. There are some other questions coming through rapidly, which I think we'll have to answer offline, and we'll look at those on the, try and get those posted onto the website. So thank you very much for your attendance today, and I do wish you all the best of luck actually, but don't forget there's a lot of reading to do. I hope I've given you some ideas and given you a bit more confidence about where you need to go for your revision. Okay, bye-bye for now.